Ethereum is about to explode to all-time new highs in the coming months. Today, I'm going to show you how to buy the bottom and sell the top. So if you like today's content, like, subscribe, hit the bell notification. Let's dive straight into Ethereum. So markets moving fives and threes. If you see my content before, that's why I rinse and repeat. Why? Because it's so predictable and powerful. And with Ethereum, we've seen this 1, 2, 3, 4, 5 textbook, this A, B, C. And it looks like we're getting close to a bottom. We got momentum in our favor. We got pattern, price, and time. So we're going to dive very deep into this and really looking at this part of the market and how we can really pick the bottom with high probability and then ride the trend as it rockets. That's going to be really, really important. I've also just launched my free crypto trading masterclass where I teach you the 4 secrets. So if you like today's content, I highly encourage you to take this because it's just going to take your trading to the next level, and the link's in the description. And it's also going to show you how you can also get early access to my content, my Telegram community, my courses, my training, and so on and so forth. So we'll dive a bit deeper into this later on in today's video. But what we're going to really focus on today, we're going to go into a bit of detail, right? I mean, we're going to drop down. This is a daily chart right now. We're going to drop down to an hourly chart, and we're going to get into microscopic detail. So we can really pick very close to the bottom what we anticipate. We are going to talk about risk management as well, how you can become risk-free. So even if you're wrong, you can make money. And then how to ride the trend. That's going to be really, really important for us. So the first thing is, we're going to use something called the daily momentum. Now, there's thousands of indicators. I like to use the Stochastics Rsi. It's the blue and red line at the bottom. And just keeping it simple, when the blue line goes above the red, does it marry up with any local lows? Well, let's look at this. Look at this. It's been very consistent. Not perfect, but very consistent. Look at this. It's just very consistent, right? The market always tends to respond. So we want to take this into account. Very consistent. So what should we assume over here? We're probably going to get some type of daily local low, right? Is it going to be the absolute bottom and the market's going to take off? We can never know for certain if it's going to just take off. But we can be pretty confident it's going to have some type of reaction, right? Because it has done the last 1, 2, 3, 4, 5, 6, 7, 8 times, even before that as well. It's been very consistent. So that gives us a high probability that the market's going to move up over the next few days, right? That's just, now that I've pointed out, it's probably pretty obvious, right? High level, what we're looking at over here, just so we're on the same page, when we're talking about all-time new highs for Ethereum, is this. Now, the market's moving 5s and 3s, and I just want to get this into context, right? I'm just going to zoom out like this. Okay, so over here is the all-time high of Ethereum. It was around just under $5,000, right? Was that what it was? Thereabouts. So it's around, just under $5,000, all-time new highs. So, all-time new highs is not going to happen overnight. But if this impulsive sequence is to continue and this is a correction, we should anticipate a nice impulsive move to the upside, some type of correction, and another impulsive move to the upside. That's what we're talking about, all-time new highs. But we need to make a decision over the next few days on how we can go along on Ethereum to ride the trend, right? Ride the trend. And today's focus is how we can really get into microscopic detail on how to really peg the bottoms. So what we're going to do, I'm going to just show you this just to make sure you're clear on what we're going to focus on today, is I'm literally just going to focus now on this part of the market. This is referred to as a wave C. Most corrections end in an ABC correction. So that's where we stack the odds in our favor. And this part of the market tends to break down more often than not in some type of 5-wave structure. And if it unfolds clearly, we can identify the bottom with high probability, very high probability, and have a logical way and a mechanical way of going long and having acceptable capital exposure. In other words, what we're willing to risk to find out if we're right. And if we're right, we're going to ride that trend. And if we're wrong, how to apply proper risk management where you can break even, make a small profit, or minimize your capital exposure. In other words, taking a small loss. And again, remember the 4 Secrets Crypto Trading Masterclass is in the link below. If you're brand new to Elliott Wave, we're going to go into a bit of depth today. It might be worth pausing this, take the masterclass, and then come back to this content. So what we're on now is a 1 hour chart. And we're just taking that last part of that wave C. Really, really important to note. And what we're going to focus on initially is Elliott wave counts. Ralph Nelson Elliott, genius of his time, 1800s, 1900s, so we're talking a couple of centuries ago. He figured this out. All markets are driven by fear and greed, human emotions, and it's crowd psychology. And what we're looking at is crowd psychology. So I'm going to do probably 3 degrees of wave counts today over here. And again, remember, wave Cs tend to break down in a 5-wave sequence. And we've been shorting this market. We've now stopped out, made a good profit on the way down, but now we're looking for a trend reversal to go long on this market. I'm looking for long opportunities right now. So we're going to first draw the macro wave count on this degree, on this time frame. So what we see over here is a nice move down. We have a nice correction, call that a 1-2. It looks like a pretty clean 3-4. And then it looks like we're on this final part of a wave 5. Now, we're looking at this. It looks like this is the final part of the wave 5. Now, what you want to now know, and we're going to take it to the next level, is this wave 5 over here, this over here, just like the whole wave C in itself, this wave 5 also if we zoom in a bit, which we're going to do, tends to also break down into a 5-wave sequence. So then we're going to have something called a wave count, a wave 5 of a wave 5. In other words, does this over here break down into 5 waves in itself? If it does, that can give us a massive clue to really peg the bottom. Doesn't mean we got a guarantee that we're going to peg the bottom. It's just high probability. So we're going to stack those odds in our favor. So now what we're going to do, just going to zoom in to this part of the market. We're focused on this part of the wave 5. I'm just going to get rid of the red line. We'll keep the text. We'll just get rid of the red line just so we can see it. And now what I'm going to do is I'm going to show you what I'm seeing. It looks like a wave 1 of a wave 5, a wave 2 of a wave 5. It looks like a wave a 1, 2, 3, 4, 5 of a wave 5. So a wave 5 of a 3. Looks like an A, B, C of a 4, and then a 5. Okay, if you're brand new to Elliott Wave, I've probably just fried your brain, right? Don't worry, I'll cover it in the masterclass in more depth. So when you go over that, this will make much more sense. But what I'm going to just do is just going to change the color to make it a bit more obvious. And I'm going to talk you through this because we're going to get into pretty detail here, right? This is practical stuff now. Because when we're doing high-level forecasting like this, high-level forecasting, when we're zooming out, we don't need to get pinpoint accuracy, especially if you're not trading it. If you're just looking for an idea of what the market is likely to do, right? So we're just saying, okay, it looks like at some point soon, we're going to have an end of a wave 2, and then we're probably going to see a wave 3. It's much more easier to do. But when we're doing the practicalities of trading, actually going long, actually doing risk management, actually putting money at risk, then we need to get into a lot of detail here. And what we're talking about here is this. This is looks like a potential wave 5. Now, the thing is, we can't make money in hindsight. In other words, if the market takes off, we can't turn back the hands of time and then make money. We have to make decisions now based on the information available now. And that's what we're going to look at today. Practical information practical signs of how to make logical business decisions based on the information at hand right now. So we're talking about this over here, moving down, and it looks like a relatively clean 1, 2, a pretty clean 1, 2, 3, 4, 5 of a 3. That's another degree of countdown. We're not going to go into that too much depth. It looks like an ABC of a 4 and a final leg down, potentially. So now what I'm looking at, just looking at the yellow right now, is something called an overbalance of price. This is quite advanced, but you're a smart individual, so you're going to get this perfectly. What I'm looking for is an impulsive move to the upside that's bigger than any former impulsive move to the upside. So we can see it's bigger than this. It's bigger than this, even by 5 or 10%. And just by a fraction, it's bigger than this by 2, 3, 4, 5%. So this over here is something we would call an overbalance of price. It's a very early signal that the trend may have reversed. And you'll notice that I'm using the word may have reversed. We can never know for sure, but there's a couple of signals. One is overbalance of price is an early signal. Another signal is the price has gone above this swing high over here. If I just draw it like so. The price has gone above this swing high over here and closed above it. That's another pattern reversal signal. So now we've got two things that are indicating we may have seen the bottom. Now on the first chart, you would have seen the momentum indicator. I'm just going to pull it up like so. Let's just, we want to stay over there, did you get? I was pulling this over here. All right, so this momentum indicator on the daily chart, the blue line has pretty much just gone over the red line. It was over it today, and tomorrow will be a bullish reversal. This momentum indicator also indicates, the name is, the clue is in the name. It indicates, because it's an indicator, we made a daily momentum bullish reversal. So it says we're probably seeing a local daily low, like a low that's going to last at least a few days and possibly a few weeks, possibly even a few months, right? We don't know that yet, but we've got a clue. So we've got overbalance of price. We've got the daily momentum bullish reversal. And we've got a pattern reversal signal in terms of a swing high has been exceeded. So now what we can look for is information that's going to help us take a long position. Now there's a few ways of doing this. You can keep it really simple. You can go long on a daily chart. It's easier to go long on a daily chart, by the way, because there's only one new bar per day. So you literally just can go, okay, we've got a bullish reversal. I want to go long above this swing high or this one bar high and put my stop loss below the low, wherever the low is over here. And if we get a movement into our direction, we go great. What's our trade expectations? Well, long term, it's basically all-time new highs, right, over the weeks and months coming. But there'll be ways of managing your trades. And I actually covered that in the masterclass as well, how to really talk about and think about being right and wrong at the same time and manage your capital exposure. So in the masterclass, you'll see this in a lot of detail. So what I'm going to do now, it's like a mini masterclass in itself, what we're going to cover here. This is practical stuff. There's a couple of things that we want to know. Okay, so if, and it is a big if, right? I'm going to put a big fat question mark over here, right? To remind us we have not had, we got an indication, but we've not got confirmation, right? There's a difference. So we want a question mark. We don't want to be under the illusion that we've got a trend reversal. We want to be on the accurate thinking that we have a potential trend reversal. That's why we have to have proper capital preservation, risk management, and so on and so forth. But what we do have now also is a impulsive move up. And then we've got what might be an ABC correction. Impulsive move up and an ABC correction. If that's the case, this might be a long opportunity. So this is what I'm literally looking to do myself. I actually had a long order. It wasn't triggered. I had to reevaluate because of what's happening right now. So we're going to break this down. And by the way, this is microscopic detail, and we're looking to enter on a 1 hour chart. What I'm talking about also applies to a daily chart. It applies to a weekly chart. It applies to a 15-minute chart. It's the same methodology. So we're going to look at a couple of things. It looks like, again, movement up and some type of correction to the downside. So we're going to do something called a price retracement. Most corrections, after a pullback, one of the safest times to buy is on the first pullback, is 50 to 78.6% retracement. So I'm going to take this low to this high. And look at this, like magic, right? We haven't got a crystal ball, but this is like the closest thing, right? It blows my mind every time. Now, it doesn't mean it's going to hold, but it's like magic, like a magnet. It's like the psychology of crowd psychology gets to the 78.6% retracement, and it has a reaction against it, and it's moved to the upside. So we want to be aware of that, very aware of that. What does this pattern look like? Well, what I'm going to denote this wave count as on the way down is we don't need to know what it is. We need to know and be aware of what it might be. And in fact, it's absolutely key and fundamental you know that you don't know what it is. Right? So we can write, it looks like a wave 1 or A. Now, if you're brand new to Elliott Wave, everything is difficult before it's easy. In the masterclass, I covered this in more depth in layman's terms, but markets move in 5s and 3s. And wave 1s and wave A's look the same. Wave 2s and B's look the same. And the initial part of a wave C and the initial part of a wave 3 tend to look the same. So when I'm writing 1 or A, it could be either or. And I'm going to talk through this in a bit of depth. Want a 2 OB. And what we're basically saying is this might be a wave C. Right, we're going to talk about this in a bit more depth. I'm going to put a big question mark here as well to remind us we don't know. We haven't had full confirmation yet, but we've got strong reasons to believe. Why? We've got the retracement pattern, pattern reversal signal. We've got the daily momentum bullish reversal. So we've got a confluence of events that's saying, right, we might be at a low. So remember, today's video is all about buying the bottoms and selling the tops. This is like very close to the bottom because this is the low over here, right? So if we manage to buy in anywhere in this region, this is considered a really tight entry. So now we're going to do a bit more analysis. What we're going to do is we're going to break down a couple of things. I'm just going to do an alternate price projection. Just want to have a look at this. I'm going to project it from here. Wave A's and wave C's tend to be identical. So this is showing typical patterns of wave C's. All right, so this is how we do this. We need to, our first objective is capital preservation. Yes, we want to make high profits, but the first objective is capital preservation. We don't want to lose money. We want to make money. So if we, it's almost like if we just focus on not losing money, if we focus on capital preservation and the trend takes off, well, then we're automatically going to make money. So we just focus on trading well. So what we're going to do is ask ourselves the question, what should the market not do if this is a trend to the downside? In other words, I'm deliberately going through this step by step because it's the practical nature of trading, right? It is what it is, right? Is if this was going to be a 1, 2, and this is going to be a 3, 4, 5, and a continuation to the downside, which is absolutely possible. All right, we have no control over this. What should the market not do? Well, the price over here, if this was a wave 3, it should not overlap into the closing range of wave 1. This is one of the elite wave rules and guidelines, right? So what we can do is we can look for, this is also called a pattern reversal signal, put a line over here, we could put an alert over here to say this hasn't happened yet. But we could say if the price goes and closes into this range over here, that's a strong signal that this wave C is going to hold and that we're not going to get a 5-wave move to the downside. So that's one way of doing it. We could also use this as an entry. We could use an entry above here. We can say we want to go long over here. There's a couple of ways you can do an entry strategy. I cover some of that in the masterclass as well. But we're talking about buying the bottoms. So now we have a high probability bottom based on your strategy. You can buy this bottom. But what we're going to do now is I'm going to show you risk management. I'm going to show you a risk management strategy. It's going to blow your mind, right? It's going to blow your mind because even when you're wrong, you can make money, right? And if you're wrong and you can make money or minimize your capital exposure, then it's like being at a casino table where you can place a bet, and if you're wrong, you just get your money back. And then you place the bet. If you're wrong, you get your money back. And then you place your bet and you're right, then you make a lot of profit. That's kind of the thinking here. So the question I ask myself is, okay, what's the minimum the market is likely to do if this is not the bottom? All right, if this is not the bottom, what's the likelihood, what the minimum the market is going to do? Well, more often than not, it will do a minimum of some type of A, B, C. And again, the original part of the A, B, C looks the same as a 1, 2, 3, right? So we don't know that. So what we do is we look for a buying at the bottom, logical mechanical wave, acceptable capital exposure. And if the market does go to here and we're long in the trade, at this point over here, we want to become risk-free. And the way to think about it is, and this is what we're going to finish on today, is forget all the macro picture and everything else that we looked at. We're just going to simply go, okay, the market immediately, recently has done this yellow 1, 2, 3, 4, 5. After a 5-wave move, the minimum that a market should do is a 3-wave. Could be the trend reversal when it turns into a 5-wave, but to get to a 5-wave, well, the first 3 parts of a 5-wave is 3 waves, right? And ABC and 1, 2, 3 look the same. So we can expect And again, we'll write this as a 1LA, 2LB, or 3LC. And the way you do it is this. I know there's a lot of detail, but again, the masterclass, I cover it in a way that just makes it more digestible. So what we do is the market should do a minimum of 50, 62 to 78.6, just as we did before. And the typical time it takes, more often than not, something called a 38 to 62% time retracement. And then this would be the minimum expectations. And what you aim to do, it's a principle called doublethink, where the best traders on the planet think different to the 90% losing traders. 90% of traders lose money. It's because they don't think correct. You have to think of being correct and wrong at the same time. It's like a golfer playing a shot. He has to visualize that the shot's going to go in, but prepare that if he misses, he doesn't want the ball to go too far from the hole, so the next shot is also going to be easy. This is what we're doing over here. We're preparing to win, but we're saying if the market triggers us into a trade and goes into this range, this potentially could be an ABC correction and a continuation to the downside. So we can just simply move our stop loss to break even as an entry point, and then all of a sudden you're risk free. So I know we covered a lot there, but that's just the nature of trading. And you'll do that with half your position. And then what you do, I'm going to zoom out. I'm going to show you this because it's really, really important that you see this. When we're looking at a trend reversal like we're looking at over here, I don't know if there's been enough space. The actual full trend, what we're looking at, is a big move like this. So we're looking at really microscopic detail, really getting in close to the bottom, becoming risk-free within the first 1 or 2 days, and then letting the trend ride and adding to the position as it unfolds. So there you go. So that's how you buy the bottom and sell the top. And if you like that, you're going to absolutely love my crypto trading masterclass. It's phenomenal because I spent a lot of time just simplifying it, and I've broken it down into the 4 secrets to quantum leap your financial freedom. And it's free, but it'll take it to the next level. And one of the elements that we really dive deep into in the masterclass is Elliott wave theory, which is basically a practical way of reading crowd psychology. So if you like today's content, like, subscribe, hit the bell notification. We're going to finish with a quote of the day from my book. When you take the masterclass, by the way, you have an opportunity to download my book for free as well. So we're going to go for a quote from the famous Michael Jordan, one of the best athletes of all time, but his thinking, right? His thinking was brilliant. And he said this, I think it was in a Nike advert that he said this. He said, I've missed more than 9,000 shots in my career. I've lost almost 300 games. 26 times I've been trusted to take the game-winning shot and missed. I've failed over and over and over again in my life, and that is why I succeed. So when we're trading and we see a high probability setup like we're doing right now, like Michael Jordan taking a 3-pointer or going for a 2-pointer or a fadeaway shot, there's no guarantee that the ball's going to go in. But with his skill set, he's got a high probability that the ball's going to go in. So if he misses, well, guess what? Is that going to impact his next shot? No, he's going to take it as if it was just a fresh shot. And trading's like that as well. Every shot is independent from one another. So we're just looking for a very high probability edge. Get the edge in our favor. So we are the casino and we know the house always wins. It doesn't mean it wins every single bet, but it wins statistically over many bets. And that's how we're playing this game as well. And that's the thinking. The paradox is that the only certainty is that we have no control of the outcome, but we do have control of our capital exposure and identifying the edge and trading the edge consistently. So Ethereum, very highly probable that we're going to see all-time new highs over the coming months. It's also very highly probable that we are close to our local daily low, and it possibly might be a wave 2 low with a wave 3 getting ready to take off. So enjoy the masterclass, take lots of notes, and I look forward to seeing you in my crypto gym, which you'll learn more about in the masterclass itself.